Hello there. Welcome to Economics N5. Today we want to look at a question from June 2023. The question the question reads, give one term for each of the following descriptions by writing the answer next to the question number, and it's ranging from 2.1.1 to 2.1.5. Right. The first question here on 2.1.1 is saying an economic system in which the prices of goods and services are self-regulated by the open market and by consumers. And then we need to identify which type of economic system is this. Remember, we have got 4 different types of economic systems that we have. We have got the traditional economic system, we got the planned economic system, and also we have got the free market economic system, and finally we have got the mixed economic system. So the most appropriate there is the market system, the market system whereby there's no government interference, there's private ownership, decisions are determined by the price mechanism, that is the forces of supply and demand, right? So if you look at this question, the explanation fits market economy, because we are seeing that there's an explanation in terms of self-regulation that is there, which means there is no government interference. And also we are seeing that it's an open market, and we are seeing that the prices of goods and services are self-regulated by the open market and by consumers. So this really fits market economy. So yeah, it's a market economy or a free market economy. So here you can just say free market system. Free market system. So that is the response there on 2.1.1. Then we go to the next question, is saying trade between countries that occur with few or no barriers. And we know that when there are no trade restrictions, the type of trade that will be there is free trade. So free trade entails or explains the removal of trade restrictions in the form of be it duties, tariff barriers, and non-tariff barriers. So the most appropriate the term there explaining that explanation is free trade. So we have got free trade here. Then we go to the next one, is saying how much of one kind of a thing, in brackets, such as hours worked, do you have to give up to get a good or service, no matter what happens to the nominal prices, right? Explanation on this one, it explains the real prices. It explains the real prices. As we know, the real prices is the prices that we use, or the value that we use in reference to base year, and we adjust for inflation. There is an adjustment for inflation that is there. And when you go to nominal now, nominal is now there's no adjustment of inflation, and the prices do not actually reflect the real prices. So we are seeing that this last part of this explanation is saying no matter what happens to the nominal prices, which means this is not the nominal pricing. So the term that we put there is real prices. Then we go to the next one. The next one is 2.1.4. It's reading an industry with only a few firms. If these firms collude, they form a cartel, which may reduce output and drive up profits in the same way a monopoly does. Right? We know this explanation is looking for a market system, a market structure that we should try to identify that fits this explanation. And we know that we have got also 4 different types of market structures. We have got the perfect market competition market structure. We have got the monopolistic market structure. We also have the oligopoly market structure, and finally we have got the monopoly market structure for products. So the most appropriate there would see that is the oligopoly. That's the only market structure that has got few firms. And you see that in the perfect market competition, we've got many firms and many firms that are operating there, and many buyers also. And that applies also to monopolistic. And the other one is the monopoly. And in the monopoly, only one firm that is operating. So that leaves us with oligopoly that has got only few firms that are operating that market structure. And in our local economy, it's explained by the mobile line industry, whereby we've got MTN, CLC, etc. That really describes the nature of an oligopoly. So here we've got oligopoly. So oligopoly is the appropriate market structure that fits the explanation that we have on 2.1.4. Then we go to the next one, which is 2.1.5. 2.1.5 reads a type of government support provided to people as with social security, but it is usually intended to ensure that people can meet their basic human needs, such as food and shelter. So this type of support, whereby the government tries to match the cost of living and the human needs, achievement of human needs by the public or the people in the country, is termed welfare. So welfare is the word that fits the explanation that we have there. So here we are going to have welfare. So that is what we have on this question. Now we move on to the next question, which is 2.2. Now we move on to the next question, which is 2.2. Then on 2.2, we are given a table that we are given there. So the question reads, study the table on the calculation of the GDP and answer the questions. And we are given a table that we are given there in terms of calculation of GDP with 2020 figures. Then we are given the value runs in billions in the next column. And then we would want to see the next question. What does it say? The next question is saying distinguish between GNP. We are here, distinguish between GNP and GDP. So GNP stands for gross national product, and GDP stands for gross domestic product. So the difference between the two is that GNP measures the total output of which includes domestically produced goods. So on GNP, we are looking at domestically produced goods, and also we look at goods that are produced outside South Africa by residents of South Africa, wherever, no matter of the location where they are. So if we have got our South Africans that are producing in other countries, we are going to include them on GNP. So on GNP, mainly we are looking at the nationality of South Africa, and wherever they are producing, we include the value of those goods that are being produced there. If they are produced abroad, then we add them to the goods that are produced locally by also South Africans. So that explains GNP. Then we go GDP. GDP only looks at goods that are produced within South Africa or within the boundaries of South Africa. That is the gross domestic product. So this is irregardless of the nationality of the producers. We are only looking at total monetary value of the goods and services that are being produced in our local economy within the boundaries inside South Africa. That explains GDP. So if you come here, we've got an explanation that is there distinguishing between these two. We have got this explanation that we have here, that the first point is saying GNP is the total value of final goods and services produced by the permanent residents of a country. So this is irregardless of the location of those permanent residents. Then we go to the second point, is saying GDP is the total value of final goods and services produced within a country's borders for a specific period, and usually this period is annually. It's an annual calculation usually. So this is what we have in terms of 2.2.1. Then we go to the next question. Right, if you go to the next question, it's saying name A and C, and we would like to see what A is. And if you come here, we have got our A saying going gross is reading gross value added at dash. That's A. So we we can have gross value added at basic prices, and we are given here at basic prices, and we can also have at market prices, and finally we can also have at factor cost. So this one is representing at factor cost. So A is at factor cost. So A is factor cost. Then C here we've got gross value added at basic prices, and C is representing the taxes on products just beneath the value added at basic prices. So C is representing taxes on products. Right. Remember, with taxes on production, we can have taxes on products, and also we have taxes on production. Taxes on production is given in this row as 82. So here we have 329 representing taxes on products. So that is what we have on 2.2.2. Then we go to the next question. The next question is saying calculate the value of B. So let's go back and see how we can calculate B. Let's see what we have on B. The figure is just above there. We have here it's gross value added at basic prices. Gross value added at basic prices. So the formula for gross value added at basic prices. So it's going to say gross value added at basic prices. It is equal to gross value added at factor cost. Gross value added at factor costs. Gross value added at factor costs. Then we add taxes. Then we subtract subsidies. So these taxes are on the taxes on production. These are the taxes on production. And also the subsidies are the subsidies that we have on production. So that is what we are going to do there. So if you go to our table and to look for value added at factor cost, we are seeing that value added at factor cost is there. Let's try to see there is the one that is in bold, 1,978. Value added at factor cost is this one, which is 1,978. So and then we are adding taxes on production, and then taxes on production is C82 here, 82. Then we are subtracting subsidies, right? The subsidies that we have. Let's see where we have the subsidies. Let's try to see there where we have the subsidies. Right, the subsidies, let's try to check the subsidies there. Right, so the subsidies we have here is 9 billion, it's here. So this is the one that we are going to subtract. So if we summarize this calculation, it becomes we start with the 1,978. 1,978, then we add the 82, and all these figures are in billions, and then we subtract 9. Then if you do that correctly, you are supposed to get 2,051 billion. So this is the calculation that we have in terms of B. So that's how we calculate B. Then we go on to the next question to see what it requires. The next question is saying which component contributed most to the GDP. So we are going to go again and then just try to analyze the figures that we have and to see which component is contributing the most. Here we are seeing compensation for employees is 1,240, and we've got a consumption of fixed assets which is consisting of 6 685. So according to the components that you are given there, we are saying that the greatest figure there is 1,240. So compensation of employees becomes the answer. So compensation of employees is the greatest figure that we have there. So you will see that in our answer section, compensation of employees is the answer. So we go to the next question and try to see what we have there. The next question is saying person Y earns 500,000 per annum and pays 30% of his or her income in tax. Then person Z earns 50,000 per annum and pays 30% of his or her income in tax. Then the first question is saying name the method of tax levied by the government. So the method of tax that we have in terms of levying, we've got what we call the regressive tax system, we've got the progressive tax system, and also we have the proportion tax system. And all those tax systems are differentiated with the way they charge in terms of rates. The level of taxes that are levied is different when we are using proportional and when we are using regressive. So on proportional, we are using the same tax rate. So this the same tax rate applies to the situation that we are given here. We are seeing that a person earning 500,000 is being charged 30%, and then we have also someone earning 50,000 is also the same rate, which is 30%. So we have got the same rate there, regardless of the level of income that a person is earning. They are being charged by the same rate. So that is the proportional. Then on the regressive, now we are saying those who are earning a higher income are charged a lesser tax rate. And then a progressive becomes the opposite. A progressive means those that are earning a higher income are also charged a higher rate. So progressive becomes sort of fair because we are earning a higher rate. You are charged also a higher rate. So here, name of tax levied here is proportional. It's proportional tax system. So if you come here again on our answer section, we have the proportional tax. So we go to the next question. The next question is saying name and explain the other three methods of levying tax system. So we have a narrative in terms of the others that we have. We've got the regressive. So regressive is explaining like what I was explaining, that higher income groups are taxed at a lower rate than lower income groups. Then we go to progressive. Higher income groups are taxed at a higher rate than lower income groups. So progressive is sort of fair, like I was explaining, that when you are earning a lower income, you are also charged a lower tax rate, which is fair. And then we go to the last one, is saying average tax rate is the ratio. This is just a calculation in terms of the amount of tax and the taxable income. For example, a person is earning 100 rands, and is charged 10 rand as tax. So the average tax rate becomes 10, the tax amount over the taxable income. Taxable income here is 100 rands, and then the tax amount here is 10 rand. So it becomes 10 over 100. And then if you make it a percentage, multiply by 100 over 1 year, multiply by 100 over 1 year, obviously you are going to get 10%. So that's the average tax rate. So we go to the next question and try to see what it is explaining. Right. The next question is saying calculate the after income tax of person A. The after income tax of person A. So person A is the first person that we have that is earning 500,000. So the question leads us to calculate the after tax income. So let's see how we can calculate that one. Let's see how we can calculate that one. So we are going to calculate the tax amount, and then after calculating the tax amount, we subtract it from the total amount being earned to get the net after reducing that tax amount. So so we are going to say the formula that we are going to use here is that taxable amount Then we subtract the tax amount. And already we know that the taxable amount here is 500,000. And the tax amount we can now calculate it because we are only given a rate. So our rate is 30%, which is 30 over 100 to calculate our tax amount. Then we multiply by 500,000 to get the tax amount now. So when you do that, that is 30 over 100 basically is 0.3. And then you multiply by 500,000, you are going to get 150,000. So this is the tax amount. So this is our tax amount. So to get the after tax amount now, so the after tax amount, we are going to say 500,000. Then you subtract 150,000. Then if you do that, you are supposed to get 350,000. So this is what we have in terms of calculation of tax amount. So if you come there to our memo, you would see that this is the calculation that we are given there. Right, so our calculation is summarized there. Let's try to see where it's summarized. Right, this is the calculation of the after tax amount. They've subtracted the taxable amount minus the tax amount, which is 150,000. Then our answer is 350,000 rands there. Then we go to the next question. Next question is saying we are given an extract that we are given there. So I will read the extract. The extract is saying the question is read the extract below and answer the questions. So the extract reads, as reported by the International Monetary Fund, South Africa's unemployment rate is forecasted to be 35.313% in December 2020. It records a decrease from the last reported number of 28.00% in December 2019. Looking ahead, South Africa's unemployment rate is projected to stand at 34.111% in December 2021. The data is updated yearly and is categorized in CEIC under World Trend plus countries focus. If this persists, there will be more people living below the poverty line. So under that now, we are given some questions on 2.4.1. The question reads, define the following terms. So here we just need to define the term unemployment. And we know unemployment, we are looking at those people that are looking and searching for jobs but cannot find the jobs. So these people also should be employable. That is, they should be able to be employed, able and willing to work. They have to have the ability to work to be regarded in the calculation of unemployment. So let's look at the explanation that we have in terms of explaining unemployment. The expression that we have here is saying unemployment refers to a condition in which qualified people are looking for a job but cannot find one. So these people should be qualified. So we cannot say we are looking for a job when you are not qualified to work for that job. So if you cannot be able to work, we cannot include you on the calculation of unemployment. Then if you look at the next question, it needs an explanation on poverty. So basically poverty, we are looking at those people that are poor, and it explains those people that are living under the poverty datum line, and they cannot match with the cost of living that is there in the economy. And we regard those people as poor, and that is poverty when they cannot live within the basic human needs. So let's look at the explanation that we have in terms of poverty. Poverty, there as explained, is saying poverty refers to a condition of not having enough money to live a comfortable life, in brackets, people's basic needs. So you cannot be able to attain the basic needs. People's basic needs are not being met. So basically, poverty refers to a condition of not having enough money to live a comfortable life, in brackets, people's basic needs are not being met. So that's poverty. So basically, so we also need to know the poverty datum line at the moment in South Africa. The poverty datum line as of October 2023, the poverty datum line stands at 1,000 58 rands. So basically what it means is anyone who is earning below that amount is regarded as a poor person. So that is the gauge that we use to see if a person is poor or not. So this poverty data line explains that the minimum that is required for you to meet the current cost of living index, you should be earning something of 1,058 or more. So that is the explanation that we have there. Then we look at the next one. The next one is asking us to explain on full employment. And full employment, we are saying is the full utilization of the labor resources that we have available in the economy. So if you look at the explanation that we have there, it's reading: full employment is an economic situation in which all available labor resources are being used in the most efficient way possible. So full employment embodies the highest amount of skilled and unskilled labor that can be employed within the economy at any given time. So basically the utilization of these labor resources that are there, remember, for us to achieve full employment, we should make a full utilization of all the labor resources that we have. And all the labor resources that we have includes the skilled and the unskilled. So the skilled and the unskilled. So it doesn't only look at skilled, but it also incorporates the unskilled. So let's try to see if we've got another question that we have there. Right. We also have a question that we have. Let's see what it's saying. 2.4.2. On 2.4.2, the question is saying differentiate between two types of unemployment. Any two types of unemployment. And if you look here, we've got many types of unemployment that we have. We have got frictional unemployment, seasonal unemployment, structural unemployment. So the ones that we've picked here are seasonal unemployment and structural unemployment. So seasonal unemployment basically explains the period when workers are not employed because of the changes in seasons. For example, we have the seasonal unemployment mainly affecting the agricultural sector and the mining sector, whereby basically, in particular, when we are looking at the agricultural sector, we are saying, let's look at the rainy season when farmers are now planting their crops. We have got high activity that is there in that sector, and more people are going to get employed there. But when the harvesting season is over, these people are going to be laid off, and then they go for a period unemployed. So that period that they go unemployed, we are now saying they are under seasonal unemployment. So the explanation that we have there is saying unemployment relates, seasonal unemployment relates to the seasons of the year. Certain economic activities require more labor during a specific season of the year and less during the rest of the year. So that's seasonal unemployment. And the next one is structural unemployment. So structural unemployment basically is caused by the changes in technology, changes in the machinery that we use and the systems that we use in the production of goods and services. The changes will lead to structural unemployment, as in the workers that are there cannot match the skills that are required. They don't possess the skills that are required to operate with the technology that is being used at that point in time. So when we have such a scenario, it means that those workers cannot be qualified to work for those type of jobs, then they become unemployed. So the unemployment has been caused by those structural changes, be it of the production techniques or the technology that is available at the point in time. So if you look at the explanation that we have there, the explanation reads: structural changes occur within the economy, e.g. changing production techniques. So that is what we have there. Then we look at the last question, is saying, what is the current unemployment rate in South Africa? So usually these figures come from Stats SA, and according to the current information that we have, that is as at October 2023, the inflation rate stands at 32.80%. 32.80% is our inflation rate currently. And how this is calculated, the employment rate and the unemployment rate, we are looking at those that are employed over the labor force that we have in the country. So maybe you can try to give the formula that we have in calculation the unemployment rate So when you're calculating unemployment, we can just say unemployment rate, unemployment rate is equal to unemployed labor force, unemployed labor force. Then this is our numerator. Then our denominator becomes the employable population. You can just put employable population, employable population there. Employable population. So employable population, we are saying those that are willing and able to work, the employable. Remember, we said if someone cannot have the ability to work, we cannot include that person in the calculation of unemployment. So that is what we have there in terms of calculation. Then obviously this is presented as a percentage. So we are going to say times 100 over 1. So basically this is the general formula that is employed when we are calculating this unemployment rate. So guys, that is what we have on economics N5. Let's stay tuned for more videos to come as we prepare for exams. We are still coming so that we are well prepared for this year's November exams. Those who haven't subscribed, please subscribe and share. Thank you for listening. With that, I'm out.